My name is Jeff Driver, General Manager Business Development and Investor Relations for Australian Foundation Investment Company. I'm here with Ross Barker, the Managing Director of Australian Foundation Investment Company, to talk about the results for the 6 months to 31st December 2015.
AFIC has just announced its half-yearly report for the end of December 2015. We were pleased that the profit was up about 10% to just over $145.6 million. Some of the increase was from increased dividends that we received from companies in the portfolio, and we did quite well on our trading activities. There were a number of events during the half year. We were able to take some advantage of those for our shareholders. We did increase our interim dividend by 1 cent to 10 cents per share, but we actually foreshadowed that at the time of our full year result in August last year. It's been quite a turbulent time in the market in the last 6 months. There's been a lot of volatility from concerns about what's happening in global growth and particularly in China. We've been affected in Australia from that sort of volatility, and we've tended to trade in a range from around 5,000 to 5,600. And you get these periods where the market can be reasonably positive, where we trade towards the top of the range, and then quite negative, and that trades towards the bottom of the range. And in fact, since the end of the year, we've actually gone lower than that. What we've been doing in this sort of complicated time in markets is to adjust the portfolio. And we've been looking to add companies from the mid and small cap space, companies that actually have quite good growth prospects and where we're more likely to get capital gains. We've also been looking to broaden our exposure to the healthcare sector, and these have been places where we've been concentrating our investment activities. On the selling side, we have been looking to reduce some of our exposure to banks and to some of the retailers. We've got quite large investments in those sectors of the market, and we think it's prudent just to trim a bit from those. I've mentioned that there has been a lot of volatility in the markets. We expect that sort of volatility to continue for a reasonable period. There's a lot of uncertainty amongst global investors as to the outlook for global economic growth, and particularly in China, as China is such an important economy to the global growth, and also what's happening in the US with rising interest rates. So this will keep investors on edge. But in this sort of environment, we can continue our focus, which is always on the medium to long term. We've been looking to maintain a quality portfolio that will be resilient through economic ups and downs, but over that medium to long term horizon will actually add significant value for our shareholders. And that's how we've done it in the past, and we expect to continue that approach.